The Nasdaq 100 gapped down overnight on Sunday to fall back below the key 13,720 support level. Price rallied on Monday to fill that gap before collapsing and staying below that 13,720 level. Price has remained below it all week, as you can see here from this chart, with bulls trying to reclaim that on 4 out of 5 trading sessions this week. The last chance saloon on Friday for bulls was when price briefly went back above it, only to run into the 20-day moving average before collapsing again. The symmetry of the candles you see here on Monday and Friday is incredible. What looks clear from the way price finished the week is that the 13,720 level is now firmly resistance, and the third breakdown has been confirmed from last Thursday. The other two breakdowns were on the 4th of January when price made a lower high, breaking the key trend line you see here in green, and on the 20th of January when price tagged the 200-day moving average before collapsing. I mentioned 3 downside levels to watch from last week's video, which were 13,720, which we're now firmly below, followed by 13,505 and 13K. We actually got close to the 13K again this week, with the Nasdaq making a weekly low of 13,106. The 13K level remains firmly on track for another retest. The new downside levels to watch are 13K, 12,480, followed by 12,220 to 260. Upside resistance will be around 13,720. One other thing that I want to point out is the correlation with crude oil and the general sentiment in the market. This week saw the US ban all imports of Russian oil and gas and energy, whilst the UK and EU implement their own plans to ban Russian oil imports over the course of several quarters. This has seen crude spike, which is bad news for the general economy. Here is a chart showing the correlation between spikes in Brent crude and the likelihood of a US recession. This chart clearly highlights a strong correlation between high oil price and recessions, which has caught the attention of the stock market as stocks have fallen sharply when oil has risen, while the opposite has happened when oil has come off. You can see this in the chart here with the Nasdaq 100 against WTI, and I've highlighted just a few examples of this negative correlation between stocks and oil. Keeping a close eye on the price of oil will likely give us clues as to how the stock market will move. If we take a closer look at the WTI chart, this is the weekly chart. We can see that price retested this key trend line, which goes back to late 2019, around the 106.20 area, acting as support. With price holding this level after last week's breakout, there is potential for another spike into next week. Price could push to test 115 again, which would mean further downside in stocks. There is some minor resistance around 111, but 115 is the likely target. It's likely we get one final push in oil prices before coming off, as the parabolic nature of the move will likely see price come back down to earth as traders look to book profits. The key here is to keep a close eye on what is happening in the oil market, as the strong correlation will help determine which way stocks go next. As always, if you'd like to learn more about technical analysis and how I come up with the levels along with my trade plans, come and join the trading community at Level Traders, where you'll get access to the live trading chat room and my daily blog. With that said, if you're getting value out of these videos, remember to hit that subscribe button so you don't miss future content, and I'll see you at the next one.